Good morning. Weekly update of the U.S. stock market. I'm Rich Potts for Critical Point, Thursday, March 27, 8:54 a.m. Eastern Time. All right, let's begin with I'm not going to show the hourly chart this morning. Really nothing exciting going on there. Let's go to the 6-hour chart and discuss the level 4 and level 3 snapshots for those of you who have to run and come back later. All right, bottom line is, believe the level 4 swing is down into tomorrow. Now, the model is warning that it could bottom at the end of the day today, right at the close. And it's very low probability, but it could bottom sometime 1 p.m. Eastern time in towards the close. But the better scenario is it doesn't bottom to tomorrow. So I think it's going lower into tomorrow, but I just got to warn you, maybe we get the lowest price out of the way today, however. I do think looking further out into tomorrow, probably we'll see it pick its head up somewhat. That's your level 4 interweek swings, pops and drops, some of them day trading, some of them literally intra-week trading, position trading over 2 days, stuff like that. Now, these level 4s I'm showing here create a sequence for level 3s. I believe the level 3 is over and done with, it's topped out. I have alternate scenarios that if we move this level 3 to here, it should have still topped out, but it may take a little longer. If we move it to there, it has met enough conditions, but could still take longer. If we move it all the way down here, that doesn't really make any sense to me. Maybe too late. It would say, yeah, they could actually put this market up into early next week and then down. But right the moment, the best call is we've got the level 3 and we got the fundamental news of Trump coming out and ramping up tariffs on the automobile industry, and that upset the market, okay? Now, so the best forecast is down in tomorrow, level 4. Got to warn you, it might come in, the bottom come in towards the end of the day. It can bounce tomorrow for level 4, okay? But I think this larger level 3 trend, although it may bottom tomorrow, okay, we got to consider that. It's earliest allowed, doesn't quite meet ideal requirements. I think additional level 4s next week will take the market a little bit lower or sideways, and the level 3 bottoms actually next week. What's the level 3? It's your buy-sell signal during the month, for a month, okay? It's the most important trend. But notice how quick it can be and not very useful. But this trend here, these are useful, okay? This is more normal within a level 3 business cycle. And they can have, you can see, very variable characteristics, okay? It just depends on the news flow, the excitement, the emotion, the money flow, the risk management, the technical chart stuff, the computers. It's all in there. All right, that's the best forecast. Now, working against me for downside here today is this indicator is oversold, trying to recover, trying to go for an intraday buy signal, day trading signal. But I think if it can take out the low at 57.30, it ought to move down to about 5,700 to maybe down 56.84, something like that. And then I can even run this for a calculation saying it might all go way back to 56.50. That's all I see for this level 4 move unless we get some increasing bearish news, primarily out of tariffs and Trump and Washington, D.C., okay? Now, this coming level 3 bottom could be the more true level 2 bottom, and ideally it would take out the price low back on March 13th. So you can look at that on the cash side, and for the futures, that's 55.09 and a quarter. And this is that would have been the March futures. So it could take that out and lower, and I do have a 54.70 up next for a downside target. But what the model is suggesting is there is a slight chance this is the level 2 bottom. This is just a level 3 pullback before going higher. It's also saying this could be the lowest price, but it's not the true level 2 bottom, but that's going to come in a little higher price to come in here like this relative to that, and it's just going higher anyways. I'm nervous there's 2 out of 3 scenarios saying it's going higher. We're going to get that April bounce, but it ought to go lower into next week is the best forecast. And maybe it stops going lower by tomorrow. I'm going to keep an eye on it tomorrow. I may have to give you an alert for level 3 because I want to also give a level 2 alert, which is more important. But what I prefer is to wait to next week. I'd like to see what they do with the tariffs April 2nd and what's developing here along the way. and I think there's more downside. I have to be bearish. Interest rates the market may be increasingly sensitive to interest rates. They're trying to move the interest rates up now. I think they're going to be higher next week. I think that can cause some problem for the stock market. But the interesting thing is the model saying interest rates just don't seem to be quite as important as they once were. All right. Let's go to the daily chart now. S&P 500 pulled back below the 200-day average. They may not like that, but some people are probably thinking, you know what? It's just pulling back to fill that gap. It's going higher. So here's what I think we should do. Give it a chance to pull back in the next week, but at any time now in the next week, if it trades above, and this is the cash price, 5786.95, I want to get nervous. It's ready to rally all the way into late April to May. There will be some level 4, level 3 setbacks along the way, but they want to get going. And I don't think it's going any higher than 5900, however, or not much higher, all right? But really, they should pull this back first for this level 3, then put it higher. But you could use that as a backup of saying maybe something isn't quite right here. They already have started up for this April rebound, okay? So then for the NASDAQ 100 futures here, pulled it back, having problems below the 5-day average here. I think it's got to go lower, and I just realized I didn't draw this correctly. This is where I'm experimenting when it should bottom for level 3. It should bottom right in there, but it may bottom as late as that. And this is the level 3 business cycle, okay? And that's for the NASDAQ. And the NASDAQ does seem to be the leader on the downside, not necessarily the leader on the upside, okay? And then we have the futures here with the latest update. Might be breaking below this tentative trend line. Don't know if it'll work or not. It's not really proven, not enough evidence. It may be bumping its head on the 5-day average. That makes sense to me. So if these futures start trading below 57.30, I think we're on our way to be down into tomorrow. Okay? All right. Now, if for some reason it bottoms today and is up tomorrow, I don't know how much to trust that for upside. But again, we start seeing taking out the high of this week for all those major stock indexes. I think I would be concerned. I'm running behind here. The model's running behind. They're starting that April bounce. And it does seem like people are getting a little complacent. They're not as bearish off of this bad news from Trump and Washington, D.C. and tariffs and all that. But they still can be bearish, all right? I'm concerning, though, that the economy is deteriorating here now at a faster pace, and we got some bad news to deal with in the future. All right, let's go to the weekly chart now and zoom out. So my level 3 idea is bearish in the next week, even though it may bottom tomorrow. My level 4 idea is bearish into tomorrow, even though it might bottom at the end of the day or after 1 p.m. Eastern time. All right, so we got the extreme or very short term to extreme and short term out of the way. Let's look at the intermediate. The intermediate are level 2, level 1s. Level 2 is kind of how we do quarterly business, but sometimes it's 1 month in one direction. Level 1 is how we do semi-annual business, but sometimes it can be 1 month or anywhere along that line, 1 to 7 months, stuff like that. All right, and the level 1 is the most important component of long-term bull-bear markets. We are in a long-term bear market from the February high into the May, June, July timeframe, and we may yet learn it'll be bearish or at least sideways down into October. It would take that long to put an end to this type of bear market. Now, this bear market is the third ranking and second ranking of 3 types of bear markets. Under Trump, it's possible we don't realize we've started the number 1 bear market. If so, this market can drop 60%. That's very low probability, low confidence, but unfortunately it must be considered, should be considered. But I don't think so, okay? However, with the mid-size on top of the minor long-term as bearish now, we need to consider minus 13% to minus 36%. Most of the time, it was rarely more than 20% down. But I wouldn't rule out a 30% move this year to the downside. There is more probability of that than a 60%. And we've been more than 7% down here, so maybe we're meeting some requirements to bottom out. But I'm nervous. It really needs 13% down or more in the S&P 500. Okay, and Dow Jones should do more than that, or Nasdaq should do more than that. Dow Jones ought to be something similar. All right, that's the long-term scenario, that it might be over and done with by May, June, July, but maybe not until October. Okay, now inside of that, we get these level 2, level 1 fluctuations that are the biggest zigzags within the bear market. All right, we've got a level 2 down move. It ought to move higher into the week of April 14th to the week of May 12th. It can move higher into the 5,800s to 5,900. I don't think any higher, but I can't rule it out, but it just seems lower probability. We may be on our way right now. The marketplace is off and running. They want to put it higher for April, okay? Then they're going to knock it down in May. So what this is telling us, we can get some relief news. We could get some more positive bullish news than bearish news, or at least less bearish news, and people become optimistic for some reason. We can do that in April to early May. But looking out to May, we're going to be back to being pessimists. There's going to be bearish news. It could get bad. It could get ugly, okay? Now, have we really started that up move for April? Well, the model is saying probably not. That probably was not a level 2 bottom 2 weeks ago. But the model is also saying it may not matter, because what it may do is just pull back part of the way by next week, place that level 2 bottom higher than the low price of 2 weeks ago. Normally, it would take out the low of 2 weeks ago. Normally it would go below 5504.65, but the model's now saying this isn't quite a normal bearish move that we've seen here. It's kind of getting tired of going down. People are kind of getting used to bad news from Trump, all right? And they may be looking at some companies are still making money, but at the same time, they better be nervous. Some companies are lowering their 12-month forecast. They better realize some of these economic indicators are deteriorating. It could get a lot worse. And Trump could still shock a lot more. And the other countries could fight back and go to war here. And they should, I think. All right. So I don't know for sure. Maybe this market is just going to keep on moving down now all the way into May, June, July. This level 2 top isn't going to work. It's going to be a little blip up on the way down. I want to warn you of that now. All right. That's now on the table. But what it may do is pull back in the next week. And then if it trades above the high of this week of 5786.95, and that may be the best information I'm giving you right now, then I think we have to consider, yes, it can bounce to 5800s to 5900. Yes, it can bounce into late April, early May, and then down, down, down. And for May, June, July, I still think it ought to go to 5470 at least. I prefer 5400 to 5100. Within sight of that, I prefer 5347. But also keep in mind, we could have a 1987 here that could put us down to 4100 or something like that. We can have a 2020 event that could put us down towards 4100. We can have a miniature 1990s or equivalent that could put us down to 4100. We can have a 1929 miniature that wouldn't put us down 90% like it did from 29 in 1932. It probably would put us down no more than 60%, okay? All of those are on the table here, all right? Could be that bad, that ugly this year. But more than likely, I think it's not going below 5,100, and it may not even go that low for this bear market. Now, once we get this bear market out of the way, I can be bullish 26 into 2027, record highs, but I don't know how bullish to be because of Trump. It's just going to be wild and crazy, and a lot of businessmen, people are saying this is getting too wild and crazy. They don't know what to do. Well, if they don't know what to do, that can actually hurt jobs, business expansion, hurt the economy. And then if Trump keeps trying to cut back, if they're going to cut printed money, if they're trying to cut back on debt, it's going to hurt the middle class and poor, because really that federal debt is not true debt. It's printed money. And you're really, the machine constantly needs to be fed a certain amount of money. And the problem with Republicans are going to be very slow, very late at helping out during a disaster. They think disasters are okay. It's part of the evolutionary process, blah, blah, blah. All right. If they don't print the money fast enough during a disaster, the disaster gets worse. It's been proven. I'll discuss more of this later. So all kinds of wild, crazy stuff for the rest of this year, of course. But I'm thinking it pulls back in next week and then does go higher later in April to maybe even into early May, maybe goes to 58, 5,900. Then I'm thinking it's going lower still, that it will go below the 5504.65 by May, June, July. Weekly indicator is actually more favoring on the bullish side, favoring that bounce for April, and it's already on a buy signal, but I think it's a little early. Bumped its head on an estimated fair value. That was nice. It couldn't stay above this old prior downside target. That's kind of nice for me. Okay. It filled this gap in here. That's over and done with. But now it has this little gap. It needs to pull back there at around 56.67, something like that. And then I think it can work higher and zigzag higher, but ultimately I think it goes down, down, down. And we may yet learn it just goes down, down, down like this. This level 2 top doesn't have to work. They don't work 100% of the time. All right. Next up. So therefore, I'm bearish into May, June, July. I'm bullish for some of April into early May, but I'm bearish into next week. Write that down. I think that'll make some sense for you. You know that I'm bearish into tomorrow. Write that down. I think that'll make some sense for you. This is the percent stocks above the 200-day average. I think it needs to blip back in the next week or two, but I think it can recover a bit. In April, I think the VIX can rebound here, maybe a little bit next week, but I think it's probably going to stall out for a while. And the bigger move of the VIX to the upside that should reflect downside probably won't be to May, June, July. But something could break loose where they just want to be bearish all the way to May, June, July on the U.S. stock market. Do keep that in mind. Okay, let's go to the Mag 7. Some people are saying that's the reason for a big bull run. Well, it's not looking too good this week. They put it up. They're starting to put it down. It looks like a negative reversal. It's not a true chart, technical negative reversal yet, but it is in my work. It's having problems with the 5-week average here. It ought to go down and lower next week, and that's high confidence, even though I'm not a stock picker, okay? Working against me, though, is this is oversold, okay? And some of these other indicators oversold. Warning of eventual rebound, but it ought to pull back some first, all right? Next up, we can go to the S&P 500 equal weighted index. Rebounded the 5-week average, having a little bit of a problem there. It ideally pulls back next week. And then, yes, maybe it can rebound a little bit later, but ideally still lower still later on. All right. NVIDIA, of course, is being watched. Some people are giving up on AI for now, and it may be the 1990s and 1920s analogs linked to AI are over and done with for the rest of the decade. It's going to be something different, but it's also maybe that they're just thrown off temporarily for a while here. At any rate, I think it's already started down. I think it bottoms next week for NVIDIA, maybe for level 2, and even if it has already bottomed, I think it can go a little lower than this into a level 3 bottom. So something very similar that I'm showing you for the overall U.S. stock market. All right, a long-term stance here. Let's go to the S&P 500 cash. I think this monthly chart needs a little bit more. It's now well below the 5-month moving average, so it does give us a little technical chart stuff of supporting the idea we're in a bear market now. And then I have these targets all over the place, all the way out to October. Let's go to the bank index here. Finally, a minor long-term top. This one is lagging and been lagging for quite a while, the overall stock market. It doesn't have to bottom to the end of this year to early next even, but I don't think it bottoms any sooner in June, okay? And that's where it might get in line with the overall stock market. But I think there's more going here for the bank index. I think that's going to make them nervous here. And interest rates are all over the place. I don't know how to really gauge this one. I favor lower interest rates the next few months because of a deteriorating economy. But looking out at next year, I favor higher interest rates because maybe an improving economy, but also improving inflation. And the bond market's got a real tough game right now of which way does it play on the interest rate environment here versus the inflation environment. Now, up, I think that pretty much covers everything I want. I want to mention the gold is exploding, I think, today. And people are just saying, boy, anything can crash and burn. Anything can go wrong. NASDAQ versus the S&P 500 ratio, working on a negative weekly. It ought to pull down, meaning it ought to be weaker than the rest of the stock market. Russell 2000, mid-caps doing a whole lot of nothing here. Nothing to write home about, okay? And so I'll now go back to the 6-hour chart here. And we're off 9 points in the S&P 500, and I think it's going lower tomorrow for level 4. I think it's going lower next week for level 3. I think it's bouncing later in April for level 2. I think it's going to be down by May, June, and down maybe by huge amounts for level 1. And then maybe we can end the bear market that started in February, at least for the S&P 500 and some of the indexes, not all of them. Some of them topped out earlier. And that bear market, however, does not have to end to October. There can be all kinds of complications and problems for some time. All right, I think that pretty much gives you everything you need to work with here. You know, we got all kinds of downside targets here. You know, the little fluctuations all the way to long-term fluctuations. We're in a bear market. The economy's still slipping. All right, I'm going to bring up some fundamental stuff and social and economist stuff here now. So for those of you who don't care about that, you can run and have a great week. Anyways, let me bring that information up. Okay, this is someone from MMT side of things working here, and I must say I'm very upset with the Mises Institute. They've come out, had someone out speaking recently, and they're mean and nasty towards MMTers, but of course they probably say the same thing to MMTers, and everybody's going back thousands of years in history trying to prove one another right or wrong. I'm more MMT than ever. I'm not worried about the federal debt. It's not true debt. It's printed money. You and I have true debt. We have to pay it back. Government never has to pay it back. They never even have to pay the interest on it, okay? And I'm going to work more and more and become mean and nasty and aggressive about that. It's time to really slug it out, blood in the streets on that stuff, okay? At any rate, what I'm scared of is this whole Trump stuff is going to starve the middle class and poor, starve the machine for more printed money, and then it's also going to trigger a debt implosion, meaning the federal debt will never cause a problem. The government can always print money. But if you hold the hands of the government and don't allow it, then you might actually cause the debt problem. Then it causes a crash and burn. And in the history book, someday they'll get smart enough saying, no, it never would have crashed and burned on its own. All right. Somebody destroyed the system. That somebody will be the right wingers. Okay. Trump's and the MAGAs. And they're related economists. All right, I'm throwing out Hayek, economist Hayek. I'm throwing out Mises. I'm throwing out, keeping Minsky just because of crashes. Other than that, I could care less. I'm throwing out, Friedman. I'm missing some people here. I'm keeping Keynes, and I was really sad the Mises Institute wanted to beat up on Keynes and prove that he was a socialist. Well, if he was a socialist, I could care less. That was his personal opinion. If you look at his work that he was presenting to governments and advising governments and what governments copied, that's not socialism, okay? It's just not socialism. So be very careful who you listen to. The reason is MMTers are really waking up. They're building some momentum. And I think in the next 5-7 years, we're going to grab hold of this and train people, train our children. We're going to get it and we're going to make it work. We're going to win. The rest of you are going to lose. Okay. But at the same time, we're going to have some ugly debates here. David Graeber started out as an anarchist. He was an anthropologist, but he got involved in many things in life. Okay, and just fascinating stuff that he has done. He had done, I think passed away in 2020. But at any rate, interesting stuff here. He kind of moved away from the anarchists and more to the leftists, and that discouraged some conservative people that liked him because as an anarchist, you're generally anti-government. But you can work that different ways. All right. So that's just some stuff I'm looking at. This is more on more of this stuff of fascism, colonialism, and stuff like that. This is more on Florida, and I'm glad I moved out of Florida several years ago and got all my investments out of there and real estate. I figured the Republicans would mess it all up, and they have. The only way they make it look good is the amount of rich people money pouring into Florida, retired people trying to put money down there, and it covers it up. Below it, they're rotten oranges, okay? All right, and then this is more MMT stuff and the commodities and free market system and this and that. Might want to take a moment to read that. This is a very interesting interview and discussion here, and they're trying to beat up on Social Security when there's very little fraud there and problems and complications, and we really need Social Security, and this could be one of the factors to crash the U.S. economy and even its financial system in the sense of even going back to government debt. And the real worries I have is private debt and big business. I'm not so worried about government, but I said when I was 14, 16 years old, I told told my dad when he was in meetings with some of his Republican business people, and they were scared we were all going to work for big government. I said, I think you're going to work for big government or big business. And they laughed and said I was probably right. Right today, that's the way it looks, but I must say I'm more nervous that we're all going to have to work for big business. All right, this is something over in the UK going back and forth on the tax of whether we need to tax rich, and this is ridiculous. President Eisenhower said he was in favor of big, high taxes. All right, why? Because he said it gets them off their butts to go out there and build business, to hire people. So what he was also saying is they needed tax write-offs to entice them to do it. Today they've simplified some of the tax write-offs, but they still have them. But on the other side, we actually cut their taxes, and it actually de-incentivized them. They're not living up to their own capitalistic system. They're just being selfish, greedy. They're not helping the middle class poor, and they're not helping the U.S., and they're going to make things worse. This is on what we spend for healthcare, just ridiculous, stupid, dumb. And this is Chinese pushing ahead in everything. Healthcare, they're pushing ahead. By 2027, they think they'll have a breakthrough on nuclear fusion. They have caught up. They are going to win this century, and if we're not careful, we won't even be a close second. The U.S. can have a lost century, and maybe even Europe, but at least there's some European countries that take care of their people better, even with high debt, and yet they still have a good economy. They're still creative. They're going to be winners compared to the other countries in Europe and winners compared to the U.S., and they're going to be the close second to Asia. They're going to get along just fine. All right, Peter Schiff here on some of their economy stuff here, and watch out for where we could get some bad news coming the next couple months on the economy. Stephanie Kelton on more MMT stuff here and Social Security. You need to watch out for that. And that's just another healthcare thing here, okay? And then this is to remind you that what the Republicans are doing, they might wind up screwing up our money system nationally here and cause a depression. If they even go to a federal surplus, which again, Clinton was able to create a federal surplus because he copied some of the Republican stuff as well as kept some Democrat stuff, and he just tried to come up with the best he could, and he did very good and was very well rewarded in the stock market. But it did also lead to the 2000 Y2K and recession and dot-com blowout and crash, okay? But we were smart enough to print some money to contain that so that it was only bad for the AI and the NASDAQ index, not for the overall stock market and not for the overall economy. The way the Republicans work is they're going to be very slow to try to do any bailouts, help out, print money. It's going to make things worse. This is not good data right here. You want to watch out for that. That can be a bad thing. All right, I got to look up a couple of more charts for you. Mariana Mazzucato, digital feudalism. I'm scared of that as well, is what's coming down the line. This person putting out some stuff on FDRs, just looking back at history, how we can make mistakes and problems here. And this is Mises, okay, which I'm throwing him out, but he actually, all of these economists I throw out, they did recognize you need a government anyways. They recognize, yes, you got to help the poor and you got to do something for middle class and you might have to spend some money during disasters. But some of them just downplayed it so much. And then today's conservative business type economists, they just downplay it, throw it all out, okay? And Adam Smith did a little better job being more fair. I keep Adam Smith. And, you know, we just have to recognize, no, some things don't work the way they've been said to be. But anyways, this was an interesting statement from Mises, however. Okay, I just realized it looks like the government has just put out some GDP estimates here. Let's see if we can zoom in on this. And there's your GDP, not doing much of anything. That's one type of GDP. It's probably not the one. I don't think that's the one I actually use in the modeling. But at any rate, nothing else going on that specific report there, but I just thought I'd throw it in, but I also have to reevaluate it and run it through the model. I did see some housing, new starts housing that's like at historical highs. So some of the youngsters I see trading, they think this is a sign of a crash and burn economy coming here, that it's simply too high, too good. And there's a few other indicators coming up. All right, I'll leave it there. The stock market is just about ready to open, and I'm still bearish into tomorrow. I'm bearish in the next week. I want to be bullish later in April. I want to be bearish by May, June. But overall, I feel like I ought to just be bearish into May, June. Past results and not necessarily indicative future results. Have a great week. Thank you very much.